Hey everyone, me Kevin here. Okay, I just got done with the Valuation podcast, and I was going to go change the pricing for the courses with that 40% off coupon code that's expiring yesterday. I was going to change the pricing, and now the Robinhood IPO comes out, and I'm like, oh my gosh, I got to get back somewhere I can record. So we're in the Valuation studio. They were kind enough to let me film in here, and we got to go through some first impressions on these numbers. Oh my gosh, like, wow, the Robinhood numbers are out. Let's do first impressions on the Robinhood numbers. So I'm going to have to just speak some of these numbers here because I can't get them up on screen. So the first thing that struck me, like right away, I'm like, oh my gosh, net loss for Robinhood in the first quarter was $1.433 billion. Actually, $1.44 billion. Like, what happened? That's absolutely horrible for Robinhood. What happened? We got to digest this. And so I kept going through the report. And here's what I'm taking away. Here's what I'm learning. Here's what I've got highlighted. Transaction-based revenue, folks, they're making $420 million. Or made $420 million in just the first quarter. That's almost double the last 3 months of last year. Their transaction revenue skyrocketed this fourth quarter. Now, we don't expect that to continue. We do expect there to be some sort of slowdown in momentum trading and volume. That's going to mean less revenues as well. But we're going to get into the weeds in terms of where they're making their money, how involved is Citadel. We've got lots to talk about here. Net interest revenue. So imagine this would be on stock lending probably and also on margin. 62 million. So really a fraction. I mean, that's like 13-14% of their transaction-based revenue. Other revenues, I imagine these are things like Robinhood Gold. I haven't read through the whole S1 yet. I've spent about 30 minutes on it right now, and we're doing this video to talk about some initial first impressions here. So a lot of weeds to go through here, but we've got $39 million there. So that's less than 10% of the transaction revenue going to this. Their expenses in the first quarter absolutely exploded in terms of marketing. Their marketing expense literally 3x'd. Their marketing expenses in the quarter went from $33 million to $102 million. Now, that's probably because they started doing affiliate partnerships with a lot of creators right before the massive GameStop crisis. And that was one of the reasons they ended up with net more users during the GameStop crisis, which ended up being perfect for them because they were able to tell everyone in the media, hey, look, we ended up getting more users despite the GameStop crisis. Yeah, but that's because between January 22nd and February 1st, you were doing a sign up and get 4 free stocks with this creator link and then paying affiliate commissions much more than you had ever done before with the sign up and get a free stock thing or whatever with Robinhood. The new affiliate structure is huge, and it cost them a pretty freaking penny in that first quarter. $102 million, that's a lot because they doubled their transaction growth, which, I mean, hopefully that marketing revenue long tails, right? I don't think they're spending that kind of money anymore. I think they realized they overspent, so this was probably a little bit more of a one-time thing just because they haven't really talked about bringing the affiliate thing back, doing the crypto things, the smaller commissions and things, but I think they realized they overspent on creator affiliate commissions. It was insane. Technology development, they spent $116 million. That's up from $81,900,000 in the last quarter and up from $55 million in the quarter before, ending September 30th, 2020. So they're spending a lot more on technology, spending more on operations, about 50% more on operations, 50% more on technology, only about 30% more on the actual brokerage and transaction side. But the big expense actually comes from, and this helps us understand this a little bit, change in value in convertible notes and warrant liabilities. Now, that's going to take a lot more weeding through to go through, but there were some recent SEC rule changes where you have to recognize warrants now, and this was a big issue with SPACs. You have to recognize warrants as an expense, even though you're getting cash from selling warrants. You have to recognize it as an expense. The same thing's happening at SoFi. You look at their general and admin, it's like way through the roof. And in the weeds of their S1 is that $83 or $87 million of that is because of warrants. Well, you've got the same kind of warrant crisis going on here, except it's for $1.49 billion. Literally, if you walked back the $1.49 billion, this company would be profitable. It's insane to say, but this company would be at around $50 to $60 million in profit. I'm doing rough numbers right now because, again, I can't share the screen. There's limited I can do here. I can only do this on a one take as well, so you're getting me pretty raw here. So right now they recognized a $6.20 loss per share in the first quarter. But again, most of that warrant liabilities, they'd be profitable if it weren't for these warrant liabilities. In fact, if they were somewhere around $60 million of revenue in the first quarter without these warrant liabilities, you would take that $60 million, divide it by 230 million diluted shares, puts you somewhere around 26 cents in quarterly revenue. That's about $1. You'd be at about $1 in annualized EPS if you could extrapolate out, because their marketing expenses are going to go down, their transaction revenues are going to go down a bit. They're probably at an annualized 2021 $1 EPS when you take out the warrant liabilities. That's actually really good, because I expect Robinhood to probably sell for IPO somewhere between a valuation. Private market valuation right now is like $60, $65, $70 per share. I wouldn't be surprised if they're somewhere closer to an $80, $90 per share, which would put them very high on 2021 valuation and be like 80, 90 times. But if you extrapolate it out to 2022, 3, 4, future PE would actually be lower. They're making a decent amount of revenue, a very decent amount of revenue. It's not bad at all right now. We've got Robinhood, primary sources of liquidity. Looks like they raised a lot of warrants and notes during the GME crisis. That I'm going to have to go through the weeds on this. I want to explore now. Here we go. This is interesting. Okay, so this here says how they're making most of their money, folks. This is mind-blowing. Okay, ready for this? Options, $197 million in the first quarter of 2021. That's almost half of their revenue is coming from options trading, and FINRA just smacked them upside the head because of misleading statements regarding options. Now, I did a whole breakdown video on FINRA and these options, but I cannot believe, this is probably about 45% is from options. Only 133 million out of 420, 420, it actually is 420 million. Total transaction-based revenue is 420 million. It's perfect. But anyway, equities is only 130. So that's less than half, right? You're somewhere like 30% or something like that. Almost half options, maybe somewhere around 30% for equities. Cryptocurrencies, this literally, Robinhood, hands down, any experiment I've ever done has the best cryptocurrency pricing. You're not paying the Coinbase Pro $5. You're not paying the spreads that you're paying at other cryptocurrency apps. And I know people hate hearing that because, well, hey, if it's not your, if you don't have control of your coin, it's not your coin. You don't have your key, it's not your coin. I get that. They don't have the crypto wallets. I totally get it. Folks, I don't know how they do it, but they've got the cheapest pricing and they still made $87.5 million off cryptocurrencies. Now it's like 18 to 20%, but still, oh my gosh. On interest lending, margin interest, 27 million. Securities lending, see, what did I say? Share lending, 35 million. Interest on segregated cash, so cash people have in their cash accounts, $1 million. That's nothing. Total net revenues, $522 million. Total operating expenses coming in at $463 million. Mind you, these operating expenses have exploded. Looking at some of their OPEX here, general and administration, these are, I want to go back to the first page here. So marketing, operations, these are comparing quarters to quarters. Yeah, you've had actually an explosion in some of these expenses. We talked about brokerage going from first quarter expenses, 30 million to 41 million. Let me see how they loop it over on this particular page here, because it's a little different. Here we have first 3 months of March. Okay. Now they're comparing the first 3 months of 2021, not to the last 3 months of 2020, but to the first 3 months of 2020. So this gives you a year-over-year overview. They are spending double on brokerage and transaction, from 20 million to 41 million. They're spending over 3.5x on technology and development, from 33 million to 116 million. Operations grew from 21 mil to 66 mil. That's a triple. You've got marketing that went up 46% year over year. So maybe they do like a beginning of the year blitz, something else I'm going to take a peek at. General and admin went up almost 4x, 34 million to, actually, that's about 4x, 34 million to 137 million for net total expenses of 463 million. Again, if you got rid of those warrant liabilities, this would be a very profitable company at about an annualized dollar earnings per share for 2021. That's very, very, very good. Now, I'm just going to verify these numbers here, because you've got, if you take 522 minus 463, that's about 60. We've got 60 in thousands, $60 million. We've got 230, well, and then multiply by 4, so 6 times 4 is 24. Yeah, and you've got 230 million shares outstanding, so that'd be 240 mil in a net. 60 times 4, 240 mil in net. They've got a diluted share count of 230 mil. It's about $1 EPS annualized per, in valuation. Well, not in valuation, in what they're earning. $1 per share without those warrant liabilities. Now, those warrant liabilities are going to throw a lot of people for a whirl. I think people are probably going to go, oh my gosh, Robinhood went from profitable in the last quarter of 2020 to losing massive amounts of money the first quarter. I think there's going to be a lot of clickbait. I don't think people are going to get into the weeds on the warrants. I've got a lot more reading to do, but this is my first impression. This is really, really interesting. Let's talk about valuation though, okay? So valuation-wise, if they are, if they're trading at, $10 a share, that would put them at a $2.3 billion company, because we've got 230 million shares times $10 a share puts them at 2.3 billion. They're not going to sell for that. Let's say they sold for 100 times or $100 per share. That would put them somewhere around a valuation of $23 billion. SoFi's clocking in at 16 bill. SoFi's not probably going to be profitable until 2022, 2023, minus these warrant liabilities. This company's printing cash, folks. It's printing money. I don't know how they're printing so much money on the cryptocurrencies. I want to get to the bottom of that. I want to get to the bottom of how they're printing so much money on these equity transactions and options. Holy smokes. Market makers here on Citadel, folks. 27% of their business is going to Citadel. 27%. Then you've got 12% going to Susquehanna International Group, Thai Moshan Limited, 11%, entities affiliated with Wolverine Holdings, 9%, other less than 10% each, totaling at 22%. And then you've got some other things as well. So, but Citadel at almost a third, you should really say just over a fourth of their market making revenues. So very, 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 very interesting S1. I cannot wait to read the rest of this. I'll bring you more updates. Thank you so much for watching this. If you like this kind of content, realize I just got this document not that long ago. This is the first impression here. We just took this. Thank you so much for watching this. Really appreciate you. And folks, we'll see you in the next one with more details. Bye.